Good morning, colleagues. I was told to behave as a banker. Just say thank you for accepting our lead sponsorships and don't sit down. But obviously, I think a lot of things has been said uh, that I need to maybe frame our context from how we see things. But I think for FNB, I think we have, I think, 2 or 3 tables of FNB homeless colleagues. My colleague Brown and Chase, Rosie Jacobs, Franco, a couple of colleagues in the room to help steer the conversations forward. But I think for us, it's really an honor to be here, to be associated with this initiative. Housing finance is very important for us. In fact, it's about half of our balance sheet. If you look at our total loans outstanding as at end of June 2023, which is about 35 billion, about 16 billion is for housing finance. So it's something that we take quite seriously. So therefore, I think affordable housing is a theme that is right within some of the things that are important to us. Obviously, as a business, we are looking to grow market. I mean, we have to always extend the runway. That's the nature of our business. I'd like to thank, I think, on the protocol that was established by the chair of the AUHF, recognize the 2 deputy ministers who gave fantastic insight this morning. Congratulations, SA, on winning the Africa Championships, the World Championships. But as I was explaining to the deputy minister, Evelyn, Ms. Honorable Evelyn Navasis, early on, I think banks are sometimes misconstrued. Our role essentially is extended from what depositors expect from us. We essentially work with depositors' money. So I made the joke, actually seriously, that when somebody puts $100, $200 and comes to the ATM to withdraw it 24/7, these days you can, like almost alcohol, get access to your money 24/7. You cannot say, no, Daniel Motinga borrowed the money to buy a farm and he's going to return it 20 years from now. Unfortunately, that's not our brief. And it's important as we discuss and deliberate on issues that are critical for national building, that we appreciate the limitations within which each individual partners operate. I think it's important that I needed to say that. But I thought, in my previous life, I used to be an economist, so I used to talk a lot. So I thought I'll share a few think aloud bullet points. I think one of the first things that we agree on is that housing is important, because it provides a safe space for family. It provides opportunities for children to better their education. We also agree that cities are important. Urban centers are important because it provides an aggregation platform for people to come together, where the economic costs of extending or developing urban through involved agency of the city of Windhoek, for example, is easier. Suddenly you have 100,000, 200,000, 300,000 households in the area, in limited space, and that provides for opportunities to develop. I think housing, obviously with the right amenities, is a key determinant and a strong condition for society to unlock location of town-specific areas. You know, people access, I mean, one of the reasons people come to urban centers is they search for jobs, they search for better schooling, they search for better economic opportunities. That's what draws people. Otherwise, I mean, myself in my private life as a farmer, I prefer staying on my farm, but there's no ATM there. There's no cinema there. My friends, not all my friends live there. So I think as humans, we are drawn to interact with other humans. That's why we come to cities. And we shouldn't look this side of that. I think the third point that we agree on is, if you look outside the state, I think the next biggest landowner is municipalities, local authorities. So I think there is an opportunity for us as banks, and we as FNB pay quite actively in that, to help local authorities develop land. I think we have significant proposals out. The city of Windhoek, we are looking at an opportunity to Franco's team, to Soccermund. And the part of the solve is to allow the municipality day one to access the funding, develop the land, and only pay us back once they have sold the urban. I think those are some of the innovations that we're looking to, and my colleague Brown will speak to some of the things that we do at the level lower, where, for example, of the development workshop through the foundation, to share some of the learnings that are there. But as Prof. Glacier notes, I think urban centers are powerful vehicles for prosperity because they bring people together, as I said, in clusters, and that's important. In Namibia, for all its beauty, it's quite diverse. You know, I think the new census that the Deputy Minister was speaking about will probably share better insights, but we used to have a density of about 1.6 square kilometers per person, kind of. You know, so it's vast spaces. You can drive for 200 kilometers without seeing more than 10 cars. I think that's what you offer. But it has its drawbacks. As most city planners will agree, this presents both opportunities and challenges. And incidentally, I positioned myself this morning among my friends from the city of Windhoek, and it was just interesting to hear, you know, how they grapple with dealing with or solving for this land issue. We were told earlier that I think the gap between Big Don, by the way, Big Don spoke earlier as an ex-FMB colleague. He actually set up our commercial property finance division not so long ago, so it is good to have an ambassador in him. But if you look at the numbers, there are about between 200,000 and 300,000 affordable housing gap. And if you take average price of say 100,000, if you hear 30,000 to 50,000, depending on the area. I mean, in Swakopmund and Walvis Bay, it's easier to excavate and develop the land. In Windhoek, it's slightly challenging because of the topography. You have to challenge mountains and valleys that are not easily accessible. Then we are probably looking at anything from 100 to 200,000 just to develop the land, to get the services in place. So if working on an average price of 200,000, 300,000 units, that's economic opportunity for bankers and other financiers for about 50 billion. That's essentially saying we would double, because when I looked at existing financiers in the housing space, the First Capitals, all the banks, NHE, that's about loans outstanding for houses about 60 billion today. So what we're essentially saying is we need to double that balance sheets in the next 7 years. Take cue from what the minister was saying earlier. It's a big ask. It's a big ask, but it's not insurmountable. So if you indulge me, then I think there is significant upside that we all agree is there, but I think it's about how we de-risk so the different pools of funding can meaningfully participate in these things. Because remember, one of the reasons, I mean, it's probably oxymoron, but why we say affordable housing is because there are risks associated with playing in that space. It's not the risk-free space. I mean, that's essentially what you're saying. As a funder and a financier that works as depositors money, what I'm hearing is when you say affordable, okay, what do I call a house in plain Windhoek? Somebody buys it because that person can afford. But when you say affordable, low income, I think there's risk. And what you are saying is through partnerships, we should be able to de-risk so that different pools of capital that Don was speaking about can meaningfully participate. I think that's what you're saying. I think there I would want to amplify the earlier point that we need to look at different ownership structures. And I've said this before in my interactions of, for example, of the City of Windhoek executive leadership, that part of the reason why low-income people struggle is the jobs move. One moment maybe as a construction worker, you are busy in Windhoek. 8 months later, you need to be in Walvis Bay. So we need to rethink our model around who needs to own the stock of property. I'm arguing, and maybe it's career limiting, but I'm arguing that maybe there's an opportunity where local authorities would be part owners of the stock for rental in some of these critical economic hubs to allow for flexibility as people move from job opportunity to job. I think we have agreed that 10-year for loans. I think these days increasingly people talk 30-year loans. Some people in certain segments argue, okay, if I pay my car off in 5 years, why can't I pay my house off in 5 years? Obviously, it's nobody will penalize you for that. But many years ago, in my prior life, I look at the economics. At what point do banks make money? Because remember, day one, a bank takes 2 million for my house from Treasury, Group Treasury, and they give it to me. With the prospect that I'll pay it back in over 20 years. So the first 7 years, I'm only working for Treasury. As a business unit, I'm not making money. The first 7, 8 years. Maybe, Ronan, the numbers have changed since then. Obviously, it's many years ago. So remember, and the point is that I'm making is when you allocate capital, as banks. The holder of our deposits, the aggregator, is Treasury. The Treasury says, my friend, if the Bank of Namibia, central bank, gives me 8%, nearly risk-free, 10% on government bonds and Treasury bills, you're going to give me for a house that will be repaid over 20 years, 9%. So there's a conundrum. I cannot discount, a 365-day Treasury bill return at 9% versus a 20-year full return of capital interest at the same price. I think we need to appreciate this issue. I think we are aligned that I think there's different pots of funding needed. I think that I take cue from both the SA experience that was shared by Honorable Twitter, as well as by Don. So I think there's different moves. I think in Namibia we have moved quite a bit in looking at pension-backed home loans. It was a novelty 10, 15 years ago, but I think the lessons from First Capital, I think they are on one of the sessions today or tomorrow to share the experiences. They're probably looking at $1 billion loan book or more these days. So I think there's an opportunity to help local authorities and municipalities across Namibia with accessing and utilizing the little bit of land that they have, obviously at meaningful or efficient pricing. One of the things that is probably under debated is, in my personal life, it's interesting, I bought a piece of land, I think in the south where I come from. I wanted to register the land through deeds, Obviously, I realized for the lawyers, in terms of the transfer duties, he or she makes a little return, better return, if they actually build a structure on it. Then, it's the land price plus the property. Then that's maybe 2 million, and on that, if you put transfer duties plus other fees, suddenly it's a sizable return. I think maybe there's an opportunity that we say, from a policy perspective, that we say, why don't we only transfer land values? Essentially, a house can burn down, but the title deed is only for the land. Why don't we, maybe for local housing, say, okay, guys, let's look at only transfer duty for local housing on land values, not the structure, substructure. I think these are some of the things. Obviously, it may mean somebody will receive slightly less. The lawyers and maybe the Minister of Finance will be upset about it. But I think we're all saying we must all give something in our pursuance to solve for this. What you've also seen specifically in Windhoek is I think there's been a glut or oversupply of office buildings. I think there's a lot of office buildings standing idle. Maybe there are opportunities around mixed-use properties that we can look at. Obviously, I think again, a certain differentiated type of capital investor is needed to explore those opportunities. I think we have heard both from the SA experience, also from the Namibian experience, that the informal market solutions have worked. The Build Togethers, Czech Dwellers Association, those have proven that people can pool resources and de-risk through joint funding mechanisms and access funding, and then have successful outcomes. I think these are some of the high-level ideas that I wanted to share with you, but also say thank you for accepting our check. I hope it made a difference beyond the coffee. So thank you for indulging us. Have a productive 2 weeks, a few days. Thank you.